Thank you very much, Mr. Chairman. I was present yesterday, but unfortunately was not here when DBN gave their account of why we're here. And just like my colleague said, I think it's very important for us to receive the information that we ask for, because this is the only way we will be able to confirm and verify the talk going out there that, yes, a large proponent of your portfolio is going to one state. And I'd just like to say, we talked to your MD earlier, that you are an intervention bank, you are an intervention institution. And by being set up as an intervention institution, you're supposed to look at the scenario, look at the market, and intervene in areas that need help, that need assistance. In essence, states that are wallowing in poverty, states that need, it's a known fact that one of the biggest problems to eradicating poverty is access to credit. People don't have access to credit. You don't expect them, to rise above the poverty line. And it's very, very obvious, even from the statistics coming, that there's a strong correlation between access to credit and poverty. So you have a situation where you cannot operate like a bank. We can't tell Zenith or FCMB who to give loans to and where to give it to. That's between them and the central. But when you now have an intervention of by the federal government, like, okay, let me set up an institution to address this imbalance. And then several years down the line, we are seeing the very same statistics that we're trying to address. According to what you gave us here, for example, Lagos State alone has 54,000 beneficiaries, 54,000 borrowers that you have given loans to. If you look at Yobe, it only has 311. This is according to the table that you give us. So the richest state and the poorest state, it doesn't take much to determine that this is the reason these things are happening. If you look at credit as a whole, Lagos gets the lion's share, and I don't have anything against Lagos. Lagos is an independent economy. So naturally it will attract, but no government will allow this kind of things to be run purely on commercial considerations. Lagos is getting 70–75% of the total credit given by commercial banks. Total credit. And Lagos is about the only state that is actually enjoying credit more than the deposits it gets from their population. States like Yobe, for example, the ratio between deposits and credit that is going is maybe 20–25%. Lagos is 100 and something percent. So when you set up, it's like GSM. If you allow purely commercial considerations, some of our states will not have GSM coverage. That's why you have the NCC that's coming in there using government money to subsidize infrastructure so that people can enjoy this thing. In the same vein, that's why you are there. And this is not limited to Nigeria. Anywhere in the world, go to the United States. You have specific laws that address disenfranchised people, black-owned businesses, women, small businesses, deliberately, putting in place policies that ensure that there's some kind of affirmative action. But you can't just sit down and, because you are participating, you are not intervening. It doesn't take anything to collect money from a central bank and then identify who you think are prime borrowers and just give it to them and go to sleep. That's not the essence. You have to assess the risk, you have to manage it. And it's not even true that it's only this so-called prime borrowers. Look at what's happening in AMCON today. Of the 5 trillion mopped up by AMCON, almost 70% of that is limited to about 20 individuals. So even these loans go bad. It's not true that disenfranchised people are not good credit customers. It's simply not true.
They are not given the credit.
They don't have access to it. They don't have access to it. So you can't sit down here, commercial considerations are pushing everything to 1 or 2 states, other states are wallowing in poverty, and then federal government pumps in money, over 70% of your equity, and you still go and participate in the same thing. As far as I'm concerned, that's not interventionist. What they call the 363 rule in banking. You collect money at 3%, give it at 6%, you're at the golf course by 3. I think there's a responsibility on you to really do more. to really do more, to spread out your portfolio, to go in there and look at how you can address the issues that give rise to your core mandate. And when you talk about criteria, for me, criteria was set up by you people, as far as I'm concerned. There is nothing sacrosanct in this criteria. Yes. If you have criteria in place that's excluding the same people that you are supposed to help, what is the essence of the criteria?
Of the institution.
You address, and we challenge, World Bank, I have been in a situation where World Bank has given loans, they put criteria for participating contractors, and we insisted that we have our local contractors. If they don't have the capacity, we should give them the capacity. Thank you very much, Mr. Chairman.